this is something, not many Indians at the end of the day take money and invest it abroad through the LRS scheme. But the fact of the matter is the LRS has been existent since time, for a very long time now. And now more and more Indians with, pay grades going up, with more and more millionaires and more, affluent Indians coming up, the more and more Indians are making use of the LRS scheme to invest in financial assets abroad. The only problem is that before the focus, the spotlight was on the LRS scheme, it was 5% taxation. Now that there is so much focus, it's 20% taxation, but banks don't know where that tax is, or where it goes, or has it been collected or not collected.
Not really, Krishna. Actually, what you said is part of the problem, right? And that problem impacts very few people. But there are multiple layers to this LRS issue and tax collected at source issue. So let's start peeling them one by one.
Yes.
Okay. Now, LRS has been in existence forever, now 20 years or so, and the limit for LRS, which is the Liberalised Remittance Scheme, for Indians taking money abroad by way of either investing or even spending, the threshold on that is 7 lakh rupees. Up to 7 lakh rupees, RBI tells you, no problem, it's your money, you take it, you do whatever you want with it, domestically, internationally, wherever. But now, about 3 months ago, this new sort of financial bill amendment came in where they said, hey, we are going to tax every spend that you make outside of Indian borders. Now, this means every time you swipe a credit card at a McDonald's in the US or in Europe to order even, let's say, $10 worth of a burger and fries,
It'll become 12.
It becomes 12. It would have become 12 until about a month ago. The clarification came from the RBI, in fact, from the finance ministry, that, hey, you know what, every transaction is not going to be taxed. We will start taxing it after you breach the 7 lakh rupee limit. But there are certain exemptions in that. Number one, if you're spending money up to 7 lakh rupees, let's say, even on healthcare or on education abroad, we are not going to tax you anything. No tax, right? But if you're making credit card spends on any other leisure activity, up to 7 lakh rupees, there's a 5% LRS. Beyond 7 lakh rupees, the tax collected at source is 20%. Now, this is where banks come in and they say, hey, how the hell do we figure out whether you have already exceeded 7 lakh rupees of your spends or not? And now, why are banks unable to track that? And that is coming out now. And this is basically a problem with instant knee-jerk decisions taken by the government to do something. What? I don't know. But to do something, to mess around with the system. Now, banks, as their operating entities, have core banking services and different verticals manage the credit card business. There is bound to be discrepancy or lack of sharing of real-time information between the two entities. Now, what happens is, you may, for example, if you are planning a trip to Europe, which you were planning, I think you've deferred it, but if you're going to Europe and you decide, let me convert 1,000 euros worth of money, right? For which you go to your bank and you pay INR and you take 1,000 euros, right? Trading at what, about 91 rupees or so. That becomes about 90,000 rupees. Let's say about 1 lakh rupees worth of euros you exchange from the bank. Now, since that is an exchange through Forex, it is straight away slapped 20% with or without the 7 lakh rupee being breached, right? Now, you have a balance of 6 lakh rupees within the LRS scheme. It's really convoluted, right? So now
but I'm following you, Karthik. We're going to, ladies and gentlemen, Karthik is absolutely, I'm going to be learning about this along with you, with Karthik explaining us. So I took 1 lakh worth of rupees and bought 1,000 rupees worth of euros.
Yeah.
And of the 7 lakh exemption limit for LRS, the first 1 lakh is taken up by this Forex transaction?
That's right. Now, this, ideally, the 20% rule kicks in after 7 lakh rupees. But in the case of Forex cards or exchanging physical cash, they are saying no 7 lakh rupee limit. 20% straight up tax. But in the case of credit cards, after you have spent more than 7 lakh rupees, the 20% rule comes in. Now, coming back to your example, you've taken 1 lakh worth of Forex, you've been taxed, let's say you had to pay 1 lakh rupees for it, the bank has straight away charged you 1,20,000 rupees, 20% slapped on your 1 lakh rupees, and you get your euros. Now, you want to travel abroad, you've got credit cards, assume you've got 2 credit cards. Okay, now, any transaction on both the cards cumulatively up to 5,80,000 rupees minus the 120 that you've paid already, or simplify it, up to 6 lakh rupees should be taxed at 5%.
Yes.
Now, banks don't know at what point you breach that 6 lakh rupee threshold. Because the credit card division still believes that your limit is 7 lakh rupees. The credit card division doesn't know you've already exchanged forex worth 1 lakh rupees. Now, assume you have 2 credit cards, HDFC, ICICI. Between the banks, they don't know how much you have spent on the other guy's card.
Fascinating.
Add to this, let's say you have a forex card.
Oh, that's card number 3 now.
Card number 3, right? That's a prepaid, preloaded card.
5% on that.
20% on that.
Oh, sorry, 20%.
20% on that. No 7 lakh rupee.
5%
limit.
on credit cards, 20% on forex cards trade, irrespective of exemption limit.
Absolutely.
Or not. Yeah.
Right. Now let me add one more. Let's peel one more layer. Yeah, this is fun. What if you are investing through a fund of funds option at, let's say, Nasdaq's FANG Plus mutual fund?
Correct.
You're doing it through Grow
1 lakh.
or any fintech for that matter.
1 lakh rupees.
1 lakh rupees per annum is what you spend. Credit cards don't know that you have already remitted that additional 1 lakh rupee.
Correct.
Now, let's assume you also have somebody in your family who you remit money to anyway from some bank account. Right. There is a brother, a sister, a cousin, a friend, somebody living abroad who you remit money to anyway as part of your obligation, your responsibility, your love. Now, you spend another 1 lakh rupees abroad. Banks don't know, credit cards don't know. You've already taken forex. You have a forex card. You have an investment. You have an investment. You have another credit card which doesn't reflect in their accounts, and you're remitting money in any case to somebody abroad.
So how much to be taxed?
So how do they tax your transaction of $10 at McDonald's? They don't know whether you reach the 7 lakh rupee figure or not.
I have a question to ask, just to put this into perspective. Here is the deal. So when you do forex, you use up that limit of 7 lakh rupees, how much ever you do forex, even as you're paying 20% tax.
For forex, physical currency exchange, or loading a forex card, or even booking a travel package through an Indian company. Let's say Make My Trip, Ease My Trip, Yatra.
A Europe travel package through MakeMyTrip.com.
Anything, any international package booked through an Indian domestic player, aggregator, is also taxed flat at 20%.
Correct.
Right. But credit cards will start taxing 20% at source when overall all your remittances abroad breach 7 lakh rupees. But unfortunately, the poor credit card manager, whether it's an algorithm or a person, has no way to real time reconcile all the payments, all the spends you have made outside of India in any case.
Right.
So that is the problem that banks are toying with. They are saying you've put a deadline of 1st July and you're telling me that anybody who swipes my credit card internationally will be taxed at 5% until he or she breaches the 7 lakh rupee limit. But real time, there is no way for me as a credit card vertical to know when your holistic cumulative LRS has breached 7 lakh rupees. So how do I tax my credit card holder? And that's the problem they are facing.
So is it an algorithm problem? Because most banks have separate verticals for credit cards and non-listing.
Yeah,
so is
so
it just an algorithm problem?
No, the problems are multifold. You actually need reconciliation at an individual level across multiple agencies.
And that too at real time.
And real time.
And real time.
It could be investments. It could be a child's education. It could be a healthcare issue. It could be forex exchange, let's say through a Thomas Cook, which is not technically in the BFSI banking space, but you've written a check to Thomas Cook and you've got your physical currency in exchange of that. It'll be a long time before this data gets understood by the algorithm or the person at the credit card division of a bank that you have spent 7 lakh rupees, and henceforth every $1 transaction, £1, €1 transaction will attract a 20%, not a 5% TCS.
Fair enough. It's clear that the things are happening in so to speak, silos.
Absolutely.
Simultaneously,
Absolutely.
parallelly.
So
and there is
banks
no way of
themselves-
reconciling between these verticals to even arrive at what should be the
Yeah.
taxation on your outward
At
remittance.
what point do they stop charging you 5% and start charging you 20%?
Correct.
Now, banks themselves, interbanks, they've got a system called CBS. I think it's a central banking system or something. So, your RTGS, NEFT, all those get
Bank reconciliation.
reconciled. That get reconciled almost real time. NEFT is real time, RTGS, etc. every 24 hours or something. But the point is, credit card verticals in any case operate as separate entities within banks, and individuals may have more than one credit card. So, interbank credit card synergies are not happening real time. So, you may end up spending 5 lakh rupees on one credit card and 5 lakh rupees on another credit
And
card.
because they
10
didn't
lakh
reconcile,
rupees,
you're paying
they
5%.
charge you 5%, so you are happy. But eventually, when the RBI tells the banks to reconcile their books at the end of the year, there's a discrepancy at the bank's end. And when you file your taxes at the end of the year, if your remittances are in excess of 7 lakh rupees, you end up paying more tax when you come back.
Right. At this, I want to stop this and ask you, first of all, just take this back a little bit. We've gone up from 5% to 20%.
And
That's like
incidentally-
punishing somebody who wants Indians. Oh, hey, if you're Indian and you have aspirations of wanting to travel abroad, wanting to invest abroad or do any of those things, then you will be punished.
So the logic that the finance ministry had come out with was that we want to identify who are the folks out there who are evading our tax system and remitting money outside of the shores of India. Now, these could be card transactions, these could be cash transactions, these could be property investments. These could be high luxury purchases, which also come under the LRS scheme, right? So, these could be high luxury purchases which need to be taxed.
Right.
Now, the understanding in the finance ministry was that perhaps people are taking their cards and taking their money on which they have not paid taxes in India and spending that abroad. My point is, in today's day and age, if you have a credit card, that credit card on your name is linked to your PAN, your Aadhaar, and you have done your KYC in any case. So how does it really help you understand that somebody is evading taxes if he makes the credit card spends internationally and not within India? You have all the information of anybody who's making any sort of transactions in any case. So why make it difficult for those traveling abroad? Because imagine your delta is straight up 20%.
Yep.
It's 5% up to 7 lakh rupees, but a family of 3, a family of 4 traveling to Europe, traveling to US will, including tickets, hotel stays, willy-nilly end up spending 7 lakh rupees and more. Now, at 7 lakh rupees, add 20% to that, it becomes 8 lakh 40,000 rupees as a dent to your immediate expenses.
Yes.
Now, if you have not breached that 7 lakh and there is some error, you can come back, you can reconcile, you can do all of that. But the point is, my 7 lakh rupees straight away becomes 8 lakh 40,000 rupees for tax collected at source. I can come back, I can reconcile, I can say all this money is from my own tax that I've already paid on my salary and blah, 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 and I can reconcile it. But until then, this 20%, this 1,40,000 rupees on a 7 lakh rupees spend is sitting happily with the government.
Yeah, listening to all this, Karthik, how I can think of is that when you do something like this, LRS, you're talking about the HNI individuals from India who are able to invest in stocks and property abroad, and you want to sort of catch them, tax the rich, if I may, so to speak. That's where the philosophy it comes from.
But the 7 lakhs is hardly a threshold for.
I was just about to get there. When you want to do something like the LRS, think about it. LRS, either which way, was taking advantages of people who have enough money to invest abroad, apart from the investments in India. Most Indians don't have enough to invest within India in the first place.
Right. So that is one. Now, the LRS, the Liberalised Remittance Scheme that the RBI had drafted, actually has a limit of Indians remitting up to $250,000 US every year. So my point is, even on the 7 lakh rupees, when you pay 20% tax at 8 lakh 40,000 rupees, that 1 lakh 40,000 rupees will come back to you. But it will come back to you when you file your taxes for that financial year, and the refund comes to you in the next, in the assessment year or in the next financial year. So up to 2,50,000 rupees, up to 2,50,000 US can be legally remitted as per the norms of the RBI by any Indian abroad. So the point is, you may want to, let's say you have a healthcare situation to take care of. 7 lakh rupees ain't going to cut it.
Yeah.
If you have a
7
child
lakh rupees
studying,
won't cut it in India, sir.
yeah, if you have a child studying abroad, education loan, staying abroad,
Absolutely.
spending for meals, travel, transportation, accessories, all sundry expenses, 7 lakh rupees ain't going to cut it.
7 lakh rupees will take care of at best one semester.
Absolutely. So the point is, you can legally remit up to $250,000 without paying any taxes, without seeking any RBI approval. Beyond that, you need to seek RBI approval. Fair enough. Do it. But the point is, in this guise to identify evaders of tax, high net worth individuals or regular folks like you and me
you're punishing
going abroad,
aspirational
you're
Indians.
assuming that, hey, if this guy is going abroad, he's got money unaccounted for, and let me tax him and put the onus back on him to claim this money back. And that, to my mind, is completely unfair.
Yeah, and it just kills the aspirations of so many Indians out there, who are working hard or looking for better lives, being able to see the world. At the end of the day, great education. That's what it tells you. You're supposed to go out there and see the world.
And the immediate impact of that 20% is huge, because you're in any case cutting corners when you're traveling abroad, or when you're sending your child abroad, or when you're tending to somebody who has a healthcare problem. That immediate impact of 20% is fairly sizable. Let's say it's 20 lakh rupees that you're talking about for one semester abroad. It straight away in the moment becomes 24 lakh rupees. That 4 lakh rupees is a hit. In a year, for the next semester, let's say 20 lakh rupees more, 4 lakhs more for a year, it is an 8 lakh rupee hit, which you will get a refund for the next year. Because you can remit up to $250,000. But beyond 7 lakh rupees, you're still getting taxed at 20%.
Right. And
so, to my mind, this is the government of India taking pretty much an interest-free loan from any Indian traveling abroad and saying, hey, you know what, I could give you this money back next year, but the onus is on you to prove to me that you have not evaded any taxes and all the spends you've done are under the LRS limit of $250,000. Up until then, 7 lakh rupees and more, I'm going to tax you at 20% tax collected at source. Below 7 lakh rupees, I'm going to tax you at 5%. And any currency exchange, forex cards, tours, travels booked through even an Indian aggregator will be taxed at 20%. It's on to you to come back and claim that money back 1 year later. Until then, it's an interest-free loan I've taken from you.
Right, and ladies and gentlemen, that's going to kick in starting for the 1st of July officially, that 20% rule that we're talking about. And Karthik, I think I'm going to postpone my Europe trip at this stage, because it looks as if...
I would suggest do it tomorrow. You still have 3 days. Hop off, hop back in.
It's not like, I just want to do the one trip correctly. I want to be continuing to do trips, over the course of the
but doing it later is not going to help as well, Krishna. This factor in, if you're spending 7 lakh rupees or more, factor in an additional cash out of 20% in the moment, which will come back to you to plan a domestic trip maybe next year.
But what really struck me was the way you put it. It's like the onus is on me to prove that I'm not a tax evader. Yeah. The onus is on me to collect the tax that I was not meant to pay, but was collected either way, that I will collect after a year, which means that straight away, savings bank account, I'm foregoing 5% interest on that cash that has been staying with the government.
That's right.
And third of all, why am I under a cloud for wanting to go travel abroad and see the world? Am I the one to be checked? Am I the one who's going to be this middle class, this growing upper middle class, which we want more and more to grow, for the consumption story in this country to grow, and for the levels of paychecks and disposable incomes in this country to grow? It's people like me who should be having better cash in hand. Well. We'll have to wait on that.
If you have friends and relatives abroad, make them spend and pay them on the side.
No, but that's also remittance. So you pay them 7 lakh rupees and more, there's another 20%.
Basically, the best way of doing is stay in India, don't spend money outside of India, spend money within India, and then just
Hindustan ka dil dekho.
Yeah, exactly. Just see as much of it. I think this is another way to promote domestic tourism, Karthik. Don't you think this is an indirect way of making that we have so many rules when you go abroad that you're going to be so scared and so worried that you will change that trip into a domestic trip?
I guess. That is one way to look at it. But every time you go abroad, you are in fact giving a boost to somebody else's economy. Again, coming back to that $10 burger, you spend that internationally, you are actually aiding consumption in the US or Europe or whichever country you've traveled to. So the point is, it could be the government trying to say that whatever consumption, these are guys who have money, willingness to spend that money, might as well get them to spend that money in India and give a boost to our consumption story rather than another countries.
Well, we'll have to wait and watch with those domestic tourism numbers. We'll see how much of a spike that they see with all of this. Eventually we will be checking on that as well, ladies and gentlemen, and telling you whether because of all of this, domestic tourism numbers are growing significantly or not.